Hi, welcome. My name's Domenic Carosa, founder and chairman of Banxa. What I'd like to do today is to present the other speakers, Holger, Arians, our CEO, and Shyam, our group CFO, who'll be presenting with me today. What I'd like to do is just give those investors who are new to Banxa, who haven't heard the story, just a couple of minutes overview in regards to what we do as an organization. And then Shyam will talk about the financials, and Holger will give us a business update. So in terms of our vision is really about democratizing finance, about providing equal access to financial opportunities to every part of the world. And how we do that as an organization is that we onboard the masses by providing both payment and compliant infrastructure to global digital asset platforms. And I'll talk more about what that means in a moment. So in terms of a quick snapshot on the company, we're actually the world's first stock exchange listed fintech payment service provider RegTech company specifically for the digital asset industry. And what we're doing is we're building a bridge between the fiat world. And when I say fiat, I mean US, Euro, Canadian, Australian dollar world, with the digital asset world being Bitcoin, Ethereum, and other coins through what we call the fiat on-ramps, as well as through the fiat off-ramps, also called the buy function and the sell function. Our business model is B2B2C. We operate in a highly regulated environment that's only becoming more regulated, which in fact is music to our ears, which we'll touch on. And it's a highly scalable business model. And more importantly, whether the price of Bitcoin goes up or down, we basically clip the ticket. There are four core things that we do as an organization. First of all, we bring together and aggregate a series of both global and local payment methods. And when I say global, I mean MasterCard, Visa, and Apple Pay. And then local payments being Interact in Canada, SEPA in Europe, POL in Australia, and many, many others. We bring those together. And Holger will talk more about why local payments are absolutely critical to the success of not only Banxa, but also the industry. Secondly, we wrap that with our regulatory and compliance platform. To operate these days, the company needs to have licenses around the world. It's unlike when we started in 2014, where some considered it the Wild West. Now the industry is regulated and only becoming more regulated. And so part of the Banxa secret sauce is to provide that regulatory and compliance platform as well as payments to our partners. And then point 3 and 4 is really about our own proprietary technology stack that we've built. It's a highly scalable technology platform that does everything from data pricing to payments to ultimately delivering the coin to the customer in the most efficient way. And whether that's off-chain or on-chain, I'm not going to get into the nuances, but it's basically making cost-effective and efficient for the customer as well as ourselves. We then wrap all of our technology, our payments, and our compliance into what is called an API or a widget, which is just another fancy name of a connection, a technical connection into our customers like Binance, KuCoin, Edge, and many others. And we help our customers acquire more customers because we take care of the payments infrastructure as well as all the compliance. And once again, Holger will just unwrap this a little bit more detail. One of the key ways that we measure performance in the company is through a measure we call TTV, total transaction value. And as you can see, for the last 18 months, actually even longer, the business has been on a very strong growth path. We will talk more about that in a moment. We will be releasing our September quarter accounts at the end of November. So watch out for those, and there'll be some further updates with regards to TTV over the coming months. In terms of capital structure, there's just over 45 million shares on issue. In terms of stock options, just over 4 million stock options, and the majority of these are ESOPs, is part of the employee ESOP, which is really about aligning our team with the performance of the company. Where our core exchange is the TSXV with code BNXA, and the secondary listing is the OTCQX, BNXAF, and FSC, which is Frankfurt on AC00. There is some research available on the company, which is available at Banxa.com, which you're free to review and download. Now what I'd like to do is hand over to Shyam, our Group CFO, who will take us through the numbers. Over to you, Shyam.
Thank you, Dom. Everyone, today I'm pleased to be able to share with you our financial year results. You would have recently seen that we lodged our accounts for FY21, and the results I want to talk to you today is in relation to that in comparatives for FY22. So FY21 has been a very strong year for Banxa. It's been listed with many firsts, albeit we've had the TSX listing, as well as the geographic expansions into North America and Europe region. Now, all of these factors have led to a strong TTV growth that Banxa has experienced. As you can see, it's 688 million, which represents close to 9 times growth on the prior year. The second part of this, which is our revenue, the revenue is 46 million for FY21, and which represents a gross take rate of about 7%. Both these factors, of course, have been underpinned by a strong focus on our partners and trying to expand that partner network that we currently have. Then taking the profit and loss performance and reflecting it further, we can certainly see a strong cash or liquidity position that's starting to emerge at Banxa. At financial year end, we had $25 million worth of liquid asset. This comprised of cash deposits as well as digital asset in our industry. And then the other perhaps key highlight for the financial year has been the maiden profit result. The adjusted EBITDA of 1.7 million was reflective of Banxa's activities throughout the financial year. Perhaps we move to the next slide, Dom. And I think just moving into the next slide, this gives you a little bit further detail in regards to the EBITDA. But perhaps 2 key things that I'd like to pick up on from this slide is regard to our gross profit margin as a percentage of TTV, or referred to as the net take rate. Throughout the year, we've ended up at 2.5%, and compared to prior year, which was at 3.9%, we've certainly seen this net take rate compress. And this has been a factor of a couple of key points in our industry. One has been the geographic mix that we've expanded into, as well as then encountering some of the competitive market conditions around pricing. As I alluded to earlier, all of this, regardless of that, has kept us in good stead. The business has continued to invest in its product, talent, and systems. And as a result, we've continued to expend with regard to OPEX. OPEX during the year reached close to 15 million, or representing roughly 2% of TTV. Vast portion of this operating expenditure is largely related to employee headcount. As you can see, during the year, we've scaled in excess of close to 100 new employees that have joined the Banxa team. And the last point on this slide, perhaps, is just to talk through to the EBITDA. The EBITDA of 1.7 million is in line with our income from operations. Now, this was realized within 6 months of listing, and despite the operational expansions spend that the business has undertaken. On the left-hand side, the table shows a number of different EBITDA adjustments, but largely just to categorize them, the bulk of the items are really non-cash items. And the other major category is, of course, the listing expense of 2.7 million. All of these, once reversed from the loss before tax, end up in a $1.7 million adjusted EBITDA position. Just to the next slide, please, Tom. Now, just moving along from the profit and loss is more around the performance of our balance sheet. I think the key takeaways or highlights here are Banxa has been able to translate its top line growth into a significantly stronger balance sheet position. As I noted earlier, there's $25 million worth of liquid assets. Now, this also translates into a much stronger working capital position. We've seen an 8 times growth in our net working capital, as well as in our quick ratio. We've seen a quick ratio of about 4 times at present point. I think the other notable point on our balance sheet is perhaps to take account is the fact that despite Banxa being a technology business, all our research and development costs have been expensed. We have not capitalized anything on our balance sheet, and we'll continue adopting this policy going forward. Now, just moving across to the next slide. It's worthwhile spending a little bit of time on this particular accounting policy, which is regarding our revenue recognition. The revenue recognition is an area that Banxa, it's perhaps not unique to Banxa, but it's certainly slightly different, and we certainly want to spend a little bit more time on it. And the nuance with the revenue recognition is all in relation to agency versus principal. Banxa undertakes 2 primary activities, which is on-ramping and off-ramping. And I just wanted to quickly shed some light with regards to what is classified as agency revenue and what is principal, and what's the determination factor. So with regards to on-ramping and the small diagram on the right-hand side of the screen, the on-ramping activities are largely seen as a service provision, where Banxa participates as an arranger of service, and hence determined to be an agency relationship. With regard to our on-ramping activities, essentially under the agency classification, it's recognized on our profit and loss as a net sale. In contrast to on-ramping is our off-ramping activity, and this is where Banxa or a customer sells their cryptocurrency to Banxa. The major nuance that's taken account here is the fact that Banxa is in control of the actual coin. And with that, Banxa carries the coin control risk, hence deemed to be principal in nature and recognized as gross sales on our profit and loss. I hope this helps with the revenue recognition. I'll pass it back to Dom.
Thanks, Shyam. Just one point that I wanted to highlight for investors, and Shyam, feel free to jump in. When we're talking about the GP as a percentage of TTV, of total transaction volume, for FY21 being 2.5% versus 3.9%, I think one of the other very important points to mention here is in FY20, the business was predominantly focused on the Australian marketplace. And in FY21, the business expanded very aggressively outside of Australia or into Europe, into North America. And hence the Australian market is, let's call it, less competitive than some other countries around the world. And I think we're now at a point where the 2 to 2.5% as a take rate, or GP as a percentage of TTV, is really the, let's call it, the industry average. So we're basically trending at that industry average. I just wanted to mention that for shareholders. Now, in terms of the business update, I'd like to hand over to Holger.
Thank you, Dom. Thank you, Shyam. That was a great overview so far. Hi, everyone. I'm Holger, the CEO of Banxa. As Domenic said, we're a B2B2C business, and what we do for the industry, we provide these local compliance and payment solutions to the digital asset space. And we do that by offering local payment methods and having those required licenses and virtual asset service provider licenses available, so that we can onboard the users to these global crypto exchanges or wallets, or whatever this digital asset platform is doing. By having credit cards as a global payment method and many local payment methods, we're available in more than 100 countries. We're true to our mission of onboarding the masses to cryptocurrency. If you go to the next slide, please. So how we're different to many of our direct competitors is that we have those local payment methods. Dom mentioned that, for example, faster payments or in the UK, or Interreg in Canada. And what that allows us, or our users more importantly, to do is to make a transfer from their bank account to our bank account and use their local currency. There is usually a lower or non-cost at all involved for that transfer. And the authorization rate or the conversion rate is much, much higher than with credit card, as you can imagine. And why is it important? Because our partners, those digital asset platforms, they really care about how many of their users are actually converting, meaning uploading coins to their platforms and then start trading or whatever they do on those platforms. And that's really important. So it's, for me, I see it as a win-win-win situation. the more we convert, the more people upload to these platforms and start engaging with those platforms. So we really focus on these conversions. And for us, it starts with the payment method. And then obviously we have a number of technologies built into our platform around fraud, compliance, and so on, so that we can really have the highest conversions in the industry. We protect our partners from chargebacks and any fraud. So we take all that away from them. And we're very confident doing that because we've done this for more than 7 years. We know the ins and outs of this industry. We've built our technology to this, and we have a team of specialists looking at that pretty much every second. So very confident in offering this service, and the industry, the biggest players in the industry appreciate that very much. Dom, if you go to the next slide, please. Just to give you a bit of an overview of what we've achieved over the last 12 months, there's much more to it, but on a high level, we've added a number of key executives and senior management so that we continue to rapidly growing. That was really important because, as Shyam has shown, we've grown very, very much. And for us, it was really key to get extra resources. Many of them who've been there, done that before, from payments companies and so on, to really bring a lot of expertise into this business. On the partner side, we've increased our partners from 38 to 72 since listing in January. And we now have a fully dedicated sales team for the first time, customer success team and a marketing team, with a great CMO as well, who's really going to onboard many, many more partners in the near future. Our order numbers have increased by 3.5 times from FY 2020 Q4 to Q2 FY 21. So that's been great. And obviously the operations need to keep up with that. So we've increased our team around that and our efficiencies, much more importantly, because we are highly scalable. But with this kind of growth that we've experienced, we just needed a really strong foundation, which we now have. We're able to process 24/7 out of 3 global locations. And we're looking after everything from customer onboarding, KYC, verification, compliance, fraud, and obviously the support. And then, as mentioned, over the last 12 months, we've really improved our automatic processing by more than 500%. As mentioned, we've onboarded a marketing, sales, and customer success team so that we can really go out there and engage with the market, onboard many, many more partners, and make sure that they are converting well. We also started a number of additional license applications for the virtual asset service provider licenses around the world, which is really important. Great thing is we have a lot of data, which really tells us which markets we have to go into, get on the ground, get those licenses up and running, and then the local payments, which is really the next point. We're engaging with strategic partners that are already on the ground from the non-crypto industry that have local payment rails. And we investigate if we can partner with them so that we can offer those local trusted payment methods, which often come at a lower cost and at a much higher conversion rate, as mentioned before. And then also what we're doing is we do have a number of enterprise partners, as you've seen earlier, and we're working with them very closely on customized solutions around our core pillars that are payments and compliance, and that has become more and more important. What I always like to say is we're sort of connecting these platforms with the old world so that these platforms can create the new world. Those blockchain innovators, they have endless opportunities in the new world. We're connecting them with the old world, building that bridge for their users so there's an end-to-end seamless customer experience. And that's where Banxa fits in. And we're doing extremely well. And that's why a number of these industry players have backed our mission as well by investing in us at an earlier point in time. So that's probably it from me, Dom. I'll hand back over to you.
Thank you. Thanks, Holger. What I'd like to do is just take investors through a number of comparables. This was prepared by Fundamental Research. It's even available on their website. And so let's call it, I think, if you just look at this particular table, you can clearly see that the median and average is between 15.2 to 18.1, and Banxa, as of the 18th of October, is trading well below this. And I think there are a number of reasons for that. But I think at the same time, this just gives investors a bit more insight into, ultimately what should be the valuation of the company. At the same time, in October 2021, there were a number of our competitors that also raised money at valuations materially higher than where Banxa is today. And there's a couple of links there for you to have a look at those particular articles. But Ramp, which is basically a startup in the space, raised at a 300 million valuation, and MoonPay, who is only a little bit larger based on our market intelligence than Banxa, raised at a $3 billion valuation. So once again, whichever way you cut it, I think there's really good value in Banxa for investors out there. In terms of key catalysts, and both Holger and I can sort of go through this and provide a little bit more color, but obviously the focus is on increasing our TTV, our total transaction volume, and the ways that we do that. There's a number of different ways or levers, as you can say. Obviously, growing our B2B customer base is one such way. As Holger mentioned, earlier this year, we had literally one salesperson building out our customer base. Now we have a full complement, a team going out there. Maybe Holger can sort of add to this as well. And then adding more licenses, crypto licenses and registrations around the world. And I just want to sort of maybe just touch on this, because this is an area that I think deserves much more attention. And I'm going to just sort of peel back the onion, as they say. In 2014, when we got involved and when this industry was very nascent, there were no rules or regulations. Banxa always had the view that a more regulated industry that was fit for purpose was actually going to help the industry grow by providing a level of consumer protection, as well as also the regulators would allow and would actually help foster the growth of this particular industry. And our view of the world is that if you want to operate in a particular country, you need to actually have a license, whether it's a cryptocurrency license or now called a VASP license. This is something that is absolutely critical for companies operating, let's call it, in a compliant way in the actual sector. And that's really part of the heavy lifting that Banxa does. And just to once again provide a bit of color, one of our licenses that we received last year was for the Netherlands. And just to give you context, that was a 12-month process from start to finish. So ultimately, this is the value that we can provide to our customers, is because we can, in effect, open up many new countries for them much faster than them trying to do it themselves. As well as adding more payment options, expanding coins. We have about 40 coins on the platform today. As we know, there are significant opportunities in DeFi, in the NFT space. And without sort of giving away too much, all I'm going to say is watch this space, as well as adding new geographical coverage and market. So maybe at this point, Holger, maybe there's a couple of areas that you'd like to highlight and touch on for our investors.
Yeah, totally. Thank you, Dom. That was a good overview. Look, it's not just sales. It's also like not just onboarding new partners, also working with existing partners and increasing their volumes. We have so many insights, so much data. We really have a very close relationship through our customer success team with those partners, where we're really looking into how can we increase conversions, what sort of promotions can we do. So, and the partners appreciate that very much, that we're very accessible, actually very proactive in that way to increase those volumes. So I think that's one really important point. And then, as Domenic said, going into these other new verticals in the market, DeFi, the NFT space, this is just the beginning. But there's just going to be much more to come in this space. And Banxa really aims to be plugged into these platforms. Many of those haven't even been founded yet, but this space moves very, very quickly. Again, the great thing is that a number of those exchanges have invested in us, where we really speak with them quite often, and they tell us what they're seeing, where they're moving. So we do have a lot of market intelligence, and I think that's really giving us a lot of insights into the positioning and how to keep winning. On the geographical side, super important that we're just continuing to increase our serviceable market by acquiring those licenses, and also then having those local payment methods, and you'll see a number of those coming online in the next couple of months as well. So that's going to be really interesting. And here again, back to our partners, they tell us which markets are important to them, and that's definitely a factor in our prioritization as well. Domenic, over to you.
Fantastic, thank you. Thanks, Holger. So that really wraps up the formal part of the presentation. At this point, we're happy to sort of take some questions as well. But just for those that need to log off now, because we're about at around the 30-minute mark, just to maybe sort of leave you with one thing. If you believe the hypothesis that digital assets, Bitcoin, Ethereum, and other coins are only going to become much more popular over the next 3, 4, 5, 10 years, then, and more people from the traditional fiat world, the US, Euro, Canadian, Australian dollar world, will be migrating across to this digital asset world, then companies like Banxa that are providing the infrastructure, the bridge between the old world or the fiat world and the digital asset world, in my view, will be companies that will prosper. And so I'd like to thank everyone for their time. And at this point, we can open it up for some further questions. Thank you, everyone.